Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, your host. On June 24th, the Marriage Equality Act was signed by Governor Cuomo. This allowed same-sex couples to get married. What we didn't think about perhaps right away was the tax implications. Our guests today are Kevin McCoy and Kevin Leary. They're both with Marvin and Company. They're both involved in issues in the state regarding all kinds of accounting issues. And I want to welcome them here. Kevin, I want to thank you, and Kevin O'Leary, I want to thank you also for being on the show.
Thank you.
Thanks. You've got, 35 years of experience in public accounting. So between you, there's a lot of experience here.
Yeah, we have a lot of time together doing taxes and dealing with clients that have unique tax issues, as well as just regular tax clients.
Mm-hmm. So this is kind of perfect. I was surprised in trying to prepare for the show, some of the things I learned. So I think that's going to be kind of interesting.
Yeah, with any change in the law, federal or state, it's often ties into tax changes. In New York State, when they passed the Marriage Equality Act, ended up dealing with all the tax issues. In July, they issued what's called a technical serviceable memorandum, which really gives you the details on how same-sex couples deal with the tax issues for New York State.
So it starts out as a social issue, but then once that's kind of passed, suddenly all the other issues come to the fore.
Well, there's always financial issues when they relate to social issues. You've heard about, there was a lot of talk about how this is going to be good for the economy, good for wedding planners and banquet facilities and all those things. And so it always falls to money somehow.
Well, that's an interesting part to look at, too. To start with, how do you file? You know, I sometimes wonder how I should file. We used to wonder about penalties, marriage penalties, and now people are trying to get married. They've tried to get rid of that penalty. But how does the same-sex couple file?
Well, if they're married, which is what New York State now allows, the options for New York State are that they file as married filing joint or married filing separate.
They can't file a single.
They cannot file a single because they are not technically single anymore.
Okay.
The unique thing is, because of the federal law, which is known as DOMA, the basically Protection of Marriage Act, which is what they refer to it as some cases, it says that a couple has to be a husband and a wife. And so therefore, to file a joint federal return, you need to have the traditional husband and wife marriage, male and female. But New York State, because they now recognize same-sex married couples, filing joint is the requirement.
Okay. So that kind of opens the whole discussion a little bit. Now it becomes two different things?
Yes, actually, what's unique about the law is that you have to file a federal return under whatever your federal status is, which is traditionally single. Now, if you have a dependent child, or what's referred to as an exemption typically, you have an option of filing a head of household status, which means you maintain a household, supply more than half of the cost of having a household that a dependent child lives with you in. And that a lot of single people, particularly divorced couples, end up filing as head of household. So that option is still available for a same-sex couple. They could file both as single. One could file as head of household and the other single.
And they have a choice in that? Is that always a choice?
Well, head of household is only a choice if you qualify for it. Only one of the two could qualify.
But I mean, it could be either one. And
if either one meets the test,
which
they can't. Well, you want to go through some of the tests?
Well, a lot of it has to do on support, and you know, if you have a child who lives, actually, they don't even have to live in your house, but as long as you meet the 50% support. So you're buying their food, you're providing their abode or wherever they may live, whether it's in school or at home, as long as you meet that 50% test. So obviously you can't have two people over 50% for the same child, for the same dependent. So in the case of a same-sex marriage, one person would become the head of household, claim the child as a dependent, and then the other person would file single at the federal level. And so basically, from a head of household standpoint, only one person can qualify.
Okay.
But your options are either head of household or single. A married option, whether it's jointly or separately, is not an option at the federal level for same-sex marriages.
So this gets more complicated when you're filing.
Right, because you have to file a joint return for New York State. So what that means is you actually have to prepare your federal returns the way you're going to file them.
And you do that first or second now?
First, you do your federal return first as single and maybe two singles, or as we mentioned, single head of household. Then you have to prepare a federal return as if you're joint. And then you take the numbers from the federal return and use them to prepare your state return. Because New York State, like many states in the Union, the base of their tax starts with your federal tax return.
Mm-hmm. Okay, now, I'm okay so far. Are there differences, though? Okay, you've got your federal form filled out. Now you try to transfer it to your state one. What problems do you find when you're trying to take what's on line, whatever, 7A or something, and put it onto your state form?
Well, if you've done the federal return jointly and prepared it that way, then simply the numbers transfer over. New York State has its own unique laws related to taxes, and you have to know what those are. One example that we use is New York has a exemption for pensions. So if you are retired and you meet the requirements for this exemption, the first $20,000 worth of your pension money you receive is exempt from New York State tax.
Okay.
That's not true for federal tax. So you still have to know what the state adjustments are.
So there are other things. It's not just this one. I know there are things that I can put on my state form, and I can't put them on my federal thing.
Well, some of that has to do with state muni bonds. If you have, if you're buying out-of-state bonds, they might be an add back because they're tax exempt at the federal level. They may be an add back at the state level.
So for some people, they're used to having differences between their federal and their state, but for other people, this is going to be totally new.
Right, and one of the unique items here, though, is having to do a joint federal return just for information purposes for your state return. So regardless of how you file at the federal level, you still have to go through the practice of filing as a joint married filing couple, basically, so you can then use those numbers that need to be transferred to the New York return if you're filing married, filing joint there.
Are there any other differences? I guess that's one way to ask the question. Any other concerns? There are a lot of deductions that we have, mortgage taxes and things. Any other specific differences?
Well, sure. If you have, for example, a home that you own jointly with same-sex married person, if you're a couple, and you own a house jointly, for federal purposes, because you're filing two single returns, let's assume, you typically would split the mortgage interest, the real estate taxes, or there is a provision in the law that whoever pays that can take the deduction. So if you have a same-sex married couple and one couple actually owned the house before they got married, and that one couple pays the mortgage and the real estate taxes, then that couple takes the deduction.
Okay.
If you are a couple and you are joint on the house, then you can split it, or one person who pays it can take the deduction. For New York purposes, now that you're joint, you both get it as a joint deduction.
Well, that brings up two questions. On the one hand, let's say one makes a lot more than the other, and it's determined somehow that it would be more beneficial that the one that makes the most would take the deduction. Mm-hmm. So sounds like there's some preparation before you get to the end of the year, or when let's back up 1 second. It was passed June 24th. When does this go into effect?
Immediately.
Okay.
As soon as you got married, you are married in New York State.
And for tax purposes?
For tax purposes, any federal and state tax law says whatever your status is on December 31st of the year that you file for, so in this case 2011, that is your status for the entire year.
Okay.
So if you get married and got divorced before the end of the year, you'd be back to two singles.
So if you've been paying, you're the one who would like to take the deduction, but the other person owns the house, and they've been paying obviously the property tax before and the mortgage, all of it. And now you're saying, well, it'd be better if this other person did it. Well, they need to really think about that ahead of time and switch who's paying.
That's correct. Because you can't take a deduction for something you're not obligated on. So you actually have to not only have paid it, but you also have to have had an obligation to pay it, which means you have to be a joint owner of that home.
Okay. Well, it gets a little more complicated.
It sure does.
Let's go back one other step. A lot of people use companies to help them with their taxes, whether it's the one down the street or Marvin Company. Is this going to cost a little more for same-sex couples to fill out their taxes?
Well, any tax return cost depends on the complications involved in it. And so it would theoretically cost more because you have to file 2 different federal returns. Actually, a same-sex couple has to prepare 3 returns for federal purposes. 2 single returns and 1 married return. And then the state return, which is a joint return, or you may decide that you want to file a separate return, so you have 2 state returns.
And if your head is spinning, you might think it's worth it because got to get this head stopped.
Well, we often will have people come to us, and Kevin has had this happen to him too. They'll call us in March or April and say, I've just thrown up my hands and I can't do this anymore.
Part
Can
B
you help
and
us
Part
out?
A, and oh my God. And
Well, and a lot of it, in the past, some of this uniqueness is kind of related to where you have a married couple and one is a resident of Florida and one is still a resident of New York, where they have a joint federal return and then they may have 2 separate state returns because one's a resident here and one's a resident there. So we've seen some of this type of return, but we've also grown through those difficulties that those clients have of trying to do those separate, because there are some very unique laws that come into play for separate filings. When you file separately, some of the advantages of filing jointly are no longer there. So you really have to run through all the scenarios. It might be
in order to know which one's better.
You might have to run the file a separate return to finally say, hey, listen, it's better to filing jointly. Even if it's for a few dollars, it may be worth running through all those exercises for sure.
And I guess the way they always say, the more complications you have. You know, if you're a student that made no money, you probably don't need a paid preparer unless you just don't understand anything. But if once you get more complicated, maybe you have a business on the side, or maybe you're a same-sex couple, it might get a little bit complicated.
Well, certainly, and we know that the cost is going to be higher, but it's one of the costs of being married and filing the returns. And until and if ever the federal government recognizes same-sex married couples, then that cost would drop, because then they'd be filing the same as a traditional, if you want to use that term, that's what the federal government uses, the husband and wife type of relationship.
Right.
It's always cheaper, though, to fix it proactively than wait for a notice from a government agency and try and help to fix it then. So,
and I find that those envelopes that come from those agencies are somewhat unsettling.
Very
you don't know,
very true.
You know, what's on the other end of that stick.
Right.
One little question on the adoption. Are there any tax questions when you go into planning an adoption?
Well, when you plan an adoption, there's all kinds of issues related to tax. Primarily, once you have an adopted child, that child is considered your exemption if you meet all the exemption tests. Those exemption tests are no different than if it is your natural child.
Okay.
So the consideration is there are certain credits allowed for adoptions. They're unique. You have to qualify for certain. It has to be a certain type of child. It has to be through certain programs and those things to get an adoption credit. But from the just annual tax purposes, there's really no difference. However, for federal purposes, as we mentioned, which of the two parties in the couple actually gets the exemption would be determined based on the factors.
Do you ever have a psychological issue that you have to deal with? I mean, if a couple comes in and they have an adopted child and you tell them, well, one of you is going to have to pick who is actually the tax father.
We haven't had it from
this
a viewpoint from this side, but we have it all the time in divorces. Because traditionally in the divorce agreement, it doesn't always address the exemption of the child and who gets to take them.
Well, that sounds harder because you have two parties who often are not exactly speaking.
Exactly. So we try, if we're asked in advance, we try to get them to work that out so that it's easier for both of the tax preparers who do the returns to be able to determine. The last thing you want is two people taking the same exemption for the same child.
Right.
That's an automatic letter, as you refer to.
Right. And it's probably a flag that they check routinely.
It is.
Okay.
Right.
So
There's already a Social Security number on file for that dependent. So basically, whoever files first would be the correct return.
see.
And then because you're trying to file again with a Social
That's
Security
interesting.
number that's already on record, you would get that notice. Or if you're having a paid preparer do it, you probably get a rejection on your filing saying that Social Security number is already on file.
Well, that's interesting. For all those gamblers out there, there's another thing to gamble on. Which one's going to get there first? Anything else? Estates? How do you? This is something everybody worries about.
Right. And one thing that's also impacted is any other tax in New York is impacted by the fact that you're now a married couple. And so estate taxes, those are the taxes that occur when someone dies on their assets that they've left to the next generation or wherever they've left it to, those are impacted. For New York purposes now, all of the exemptions and deductions that are allowed on a federal return are allowed for same-sex married couples in New York. What that means is that if you die and you have in New York more than $1 million in assets, now that seems like a lot, but it does include your home, does include the value of your retirement accounts, and it does include any other assets you own, including cars, jewelry.
Right.
If you have more than $1 million in New York, you have to file a tax return, an estate tax return. If you left all of that excess over $1 million to your same-sex partner before you were married, there was a tax associated with that. Now, if you leave that excess over $1 million to that same-sex married partner, couple, there's no tax because there is what's called an unlimited marital deduction. You can leave as much money as you want to your married spouse.
Sounds logical.
It's logical and it's a great benefit, and every same-sex couple should certainly consult with their estate attorney, make sure that they have their wills and trusts and any agreements properly drawn so that they can take advantage of these new this deduction and credit.
Now, I'm almost afraid to ask, but now when you translate that into the federal arena, how does that play?
Federal government, the law has not changed, which means that if you leave something to your same-sex married partner, you are not allowed that marital deduction for federal purposes.
And last time I looked, the tax rates for the feds was higher.
Well,
The limits,
federal tax doesn't kick in until $5 million.
Oh, great.
as of now.
Right now.
Through 2012, that's the
Okay.
number.
Right.
So that helps.
But New York State's $1 million, so it really does make a difference.
That helps a lot.
Right.
Right.
Oh yeah. So
Right.
that's a big advantage for same-sex married couples.
Okay. Anything else that we should be looking at in terms of preparing for the April 15th deadline?
You want to talk a little bit about that? Sure.
Well, we always, with our client base, we always talk about it's never too early to start planning. You do have a lot of people that wait until December to have a better idea as to how their year is going to look, and then we can start doing some planning for them. We really try and stay away from next March having people coming in and say, hey, we need your help. It's hard for us to really provide a benefit to those people after you've gone through the whole year. There's very little you can do at that.
And you can't give them advice as what they should be doing in
Right.
July or,
Right.
or
So-
March or whatever.
Right, and so it's a very good time of year, maybe in October to November, to start really thinking about how your year went, start getting organized. If you sold some stock, if you had maybe a unique situation during the year, you should really start talking to your professional about, is there something I can do? How is that going to affect me? And it's really limitless. It's always disappointing to hear something from someone after the fact when they thought, oh, I didn't think it was going to be an issue, and then it becomes an issue. Just ask the question. It's easy for us to say you don't have to worry about that, but if we don't know, it's hard for us to deal with it. So,
And if they don't even come in, you can't ask them any questions to probe.
right. I mean, the worst situation you always hear is, well, my friend next door has the same situation. You never have the same situation. It never, ever, ever happens. And even if it is the same situation, there's probably so much more different that goes through their return that's completely different from your return. Each
Then
return
the amounts
is so,
could be different.
Right,
Probably
sure.
don't know
Right.
those.
You just never know. You might go into another threshold. You might not get the same benefit. They might have complete different other tax situations in that same arena. So it's really important to talk with professionals about the things that are out there that could affect you for sure.
One thing same-sex couples need to do almost immediately if they got married is that if health insurance is being provided to their spouse, for federal purposes, the cost of that health insurance from the employer is taxable. But now, for New York State purposes, it's not taxable. So they will actually have a number on their W-2 for New York State purposes that's lower than the number on their W-2 for federal purposes. Because included in the federal number is that cost of supplying health insurance for their same-sex, under federal law, partner. In New York, the cost of health insurance for a same-sex married partner is not taxable.
Oh, interesting. So is there a change in the W-2 form, or is this something that was always there?
Well, on the W-2, there is a federal box and a state box. In the federal box, the cost of that health insurance is just added. You don't actually see it in there. But we've had clients that come to us and say, well, my salary is $30,000, how come this shows $33,000?
Right.
And then you determine that $3,000 was the cost of providing health insurance for their same-sex partner. Now, for federal purposes, that box will still say $33,000, but the state box will only say $30,000.
So this is another one of those flags probably where when the computer goes through, it checks to make sure that on the W-2, if it says there's a difference and the form doesn't reflect that, they're going to kick it out.
Right. Well, in New York, because New York follows the federal form, what will happen is the 33 will actually be reported on the wage line, but there'll be a subtraction now for the health insurance cost that's included in the federal box 1. You'll know that amount because the difference between your state wages and your federal wages will be typically that amount. There could be other things, but that's a flag, something to look for.
Is there any other thing you should think about in terms of the W-2 when you're setting up how much taxes you want out? Now, I know everybody's different. Some people might say, well, I want to pay as little as possible without having a penalty because I can use the money until then. But other people don't like surprises and have to come up with another 600 or 1,000 or whatever it could be. In terms of setting up your W-2, now we have such different situations. You could have a real different bill from both.
Without a doubt. And this is something that I think that's tremendously overlooked. And it really comes down to what the individual wants. There are people out there that say, hey, I'd love to get a big check back from the government. I'll leave as much in as possible. But from a practicality standpoint, it's almost better to try and break even. You don't want to leave your money in there for that long. But there is a form for New York State, it's the IT-2104, that basically you go in and you can dictate how much you want withheld from each paycheck. And
from New York and the Feds?
For the Feds, it's called a W-4. That's your withholding.
Right, that's
and then
what we're all
the New York equivalent is the IT-2104. it's very important that if you were a same-sex marriage and a same-sex couple, now you're married and you may have 1 or 2 children, you now have some additional deductions or exemptions and things of that nature that are just naturally reducing your income tax burden. So maybe there's not a reason to have so much money withheld anymore.
Right.
So it's always good to keep an eye on that. But from a safe standpoint, we always tell people it's maybe better to have the higher amount withdrawn just so you don't run into an issue where, hey, I thought I was going to need less and I went that way, and then something else happens during the year where now you have more income to combat that other issue and now you're short.
Right.
So you always rather have more in there than less, obviously, from a penalties and interest burden.
Okay.
But it's definitely something that, and this is the same across the board for any couple. If you have a new child, maybe you bought a house and now you have mortgage interest deduction and real estate taxes and a lot of other deductions that are just naturally reducing your tax burden. It might be a good idea to revisit how much you're having withheld, just so maybe, instead of getting a huge chunk back, you meet somewhere in the middle so you don't leave so much money in there throughout the year.
Okay. We're getting close to the end. I just want to go back. There's taxes, and you mentioned estates, and that's a really big issue. The word will, as in, do I have a will? How important is that? Does that become less important now with this Marriage Act, or is it just as important as ever?
Well, I can't speak from the legal side of it, but from the tax side, certainly from an estate planning and an estate tax, it's very important for same-sex married couples to have wills that coordinate the fact that they're married now.
Okay.
Because these New York State exemptions and credits could be significant savings for them. And this is way too early to determine what the courts are going to decide when it comes to what happens if you don't have a will, and if you have children from maybe you had adopted children, maybe you were married before and now you're a same-sex couple and you had a traditional marriage and you had children by that first marriage.
You could have alimony.
You could have lots of things, child support, and the issue of who is entitled to your estate when you die. Maybe you had children before you got married, so
could be contested.
The same issues that involve divorce, the traditional marriage, husband-wife divorce situation, and I only again use the traditional term because that's what the federal government uses, that those same issues now apply. And that's what a same-sex married couple should realize, is that for New York, everything that applies to other married couples applies to them.
Sounds good. Any final advice? I'm out of questions.
Like we said before, I think there's always an opportunity to meet earlier than later. And a good tip if you're self-preparing your returns is whatever you had last year, you want to make sure you have that same information this year. Unless you can say, oh, I sold that stock, or I shouldn't be expecting something from a bank anymore because I'm out of there. But you see more and more just under the pressure, under the gun, people are trying to get through it as fast as they can. They leave it to the last minute sometimes, and they just forget, an interest statement, or they forget some income. It's okay to always forget a deduction, because if you have to amend a return, you'll have money coming back to you. But you really want to try and negate forgetting income, because the IRS already has that they already have that on file.
And now there are penalties, right?
Right.
There
can be penalties and interest, and they can add up pretty quickly. Especially because sometimes you won't get the notice for maybe a year, 18 months, and by then, you're at their mercy, really.
Right.
So.
And the other thing that's happened is if you're now a same-sex married couple, you're not used to gathering your information jointly.
Right.
And so now you have to put it all together, and really prepare it as if you are, we're married always, and keep track of it now differently than you did in the past.
So it seems unless you're really good at reading and maybe you've already had a tax course, you could use some advice here.
I think that at least in the first year, same-sex married couples should seek professional guidance to make sure that their returns are filed properly, because the effects can be pretty significant, and as you get down the road, You only have a 3-year window of statute of limitations to file amended returns, and you really want to make sure you do it right the first time.
And we say that with everything, though. Anytime you have a unique scenario pop up during a year, and being married during the year is a unique scenario. Whether maybe you sold a business, maybe whatever it may be, whenever you have something unique, that's when we get the majority of our new clients that come in. Something happened during the year that they don't know how to handle.
What do I do now?
Regardless of what it is, from the hardest thing out there to maybe just, hey, I'm not used to selling stock. All of a sudden I have this gain. What do I do with it? Mm-hmm. Anytime you have anything like that, I'm retiring. I have Social Security. Is that taxable? Well, it might be. And a lot of people don't know that. So all these things that might come into play, anything that's unique, anything that's a little outside the norm, and you don't feel comfortable just getting your information from reading the instructions and talking to people that don't have the knowledge, we always would recommend to get in as early as you could.
Kevin McCoy, Kevin, thank you so much for being on the show. Interesting.
Yeah, thank you.
Thanks for having us.
And I want to thank you for watching. I hope you enjoyed the show, that you tune in again next time, and that you have a great week. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.